Hi everybody, so today I'm going to be covering point figure with volume, which is called the tape reading chart. Alright, now the tape reading chart is basically PNF with volume. Alright, so this is similar to a footprint chart, but it's done on a point and figure, and this is probably the earliest example of a footprint chart that was done on point and figure, far before the footprint chart was introduced on bar charts. Later, this was done in the 1920s, and it was used by Wyckoff for day trading. He used the wave. The Wyckoff was basically a wave chart, and used a footprint chart, called it the tape reading chart originally, and it was done on point and figure. So the reason why I like this chart is because there's a level of clarity. All right, so it's the clarity of supply and demand. There's a lot of clarity, and that is because it takes out time and shows pressure up and pressure down, and pressure at prices. All right, which is very important, because if you're trying to track smart money, you need to see the footprint or the pressure at prices. And it's really important because a lot of modern day footprint, they have time, so you can't really see it gets lost in time. The pressure gets lost in time, right? So when you remove the time element, you can see the pressure at the price area, because as soon as you add time, there's certain pros and cons, right? So we're going to be taking a look at it. The key for me is I don't really use cause and effect with these charts. What I use is clarity. It gives me clarity by showing me very clear pressure up or down. And what you want to do is basically just look at the level and see if there's pressure there. Alright, so use a high time frame level, and you want to see if there's pressure there. Buying or selling pressure. That's all. So first you need to have a high time frame level. This could be anything. It could be anything, but preferably the higher the time frame, the more likely there is going to be a good reaction. So whatever level you want to use, you use any level. Folks use highs and lows, or volume-based levels, high volume levels, etc. Doesn't really matter, but it needs to come from a higher time frame. And what I want to see is if there's pressure there or not. So I'll just show you. And I'm mentioning clarity because a lot of times bar charts and even wave charts will not show you clarity. They will not. And the reason is because a lot of times the move will look like this. Right? So it looks like a downtrend. But what you don't realize is that this pullback is really strength. So this pullback, it looks like a pullback. Right? It looks like a bear rally followed by a pullback, but this is actually your sign of strength or change of behavior. But you cannot see this easily. I have some indicators and stuff that allows me to see it, but one clear way of seeing it is with this point and figure with volume, which is a tape reading chart, is really good for this. So you don't start second guessing. You can very clearly see the pressure going up. So there's a certain amount of clarity that this thing gives you that you cannot get from other charts. All right, that's why, in my opinion, something like this is, I would say, required, not just a nice to have. I'll give you some examples now, and we'll take a look at a number of examples, and also example right now. All right, so I'll give you an example right now that's occurring. Let's go to this is the euro. Actually, this is actually more clear, but you know, the market here pulled back into this zone, all right, between what is 16935 and whatever. So this is the zone. Market pulls back. When it pulls back, you see some pressure here, right, where it's starting to rally. And normally you don't know, you just don't know, right? Okay, this could be a rally, it could just dump. But from a pressure perspective, look at this. You know, from a pressure perspective, bang, look at that. This is the biggest volume in 81 up bars. Again, this is the biggest volume in 81 up bars right here. So this is like a little base, right? And then this was the original, and now you have that heavy pressure. And you can see I have an indicator on top that just allows me to filter, so I don't have to take a look at all of this shit, right? I can just look at the big green and big red. That's all I want to see, big green and big red. And this big green right here, bang, right here. And this is the zone of 1.7075, and the other one from 1.696, whatever this zone is right here. It goes into that zone, right? And then bang, buying pressure comes in. All right, now typically, so a lot of times you can't even see this on the wave chart. A lot of times you can, but a lot of times you can't. All right, so for me, this is right now. This is happening right now. This is a buy right now. So you know, does this bang right here, pull back, reversal, long, no problem. Put the stop below this low or this low and let it fly. All right, so this is a real time. Now let's take a look at other examples. So this here, you can use 60-minute levels, you can use 3-hour levels, you can use daily levels, but the thing is you just have to use the tape reading chart or whatever it is that you use so you can clearly see the pressure. So here you had a rally and you pulled back into that zone, which is the pullback zone, right, into these brown lines or orange lines right here. This is the rally, pull back, it's in the zone. Right, so now we go on a lower time frame, and here's an example. You might not be too confident about it, right? So this zone here looks like a bear flag or a bear pullback. There's good price and volume statistics, but it seems bearish. Why? Because the background is heavy selling. So you're like, I don't know whether I should buy, because wouldn't I rather sell? Right, because there's big selling pressure. But as it comes into the zone, there's buying pressure. It seems like, you know, it's less than the selling pressure, but that's when you go to this chart to give you that level of clarity. And you see that as it went into the zone, you have this crazy, this move right here, which is the biggest volume in 51, right? 51, biggest volume in 51 up bars, up columns. It also has like a little base in the back, and it has big green. Right, so I won't be looking at any of this until big green. So we have that big green, and I see that, you know, it has a little base in the back, goes up, is a breakout, biggest in 51 columns, and you have that 55 and 50. It's like 5,000 contracts and 5,500 contracts right here, and then sets up the pullback. So the pullback here is a buy. Why? Because demand came in at a level or at a zone. That's it. That's all I can do. I can go look for a level or a zone. That's what trading is. You know, you have your levels, and you see if there's pressure coming in, and if there's pressure coming in, you get in. and you follow your execution plan, try to ride it and moving your stops up. That's what really what trading is. It's just levels. It's just levels of where you had prior buying and selling, and then you're just waiting to see if the pressure at those levels comes in again like it did before, and if it does, look to execute your entry. So what they're saying is that there's a level, there's a zone, it goes into it, and then bang, there's buying pressure. So that's the way I view it. It's nothing more than buying pressure where there was buying pressure before. Goes into that area, and bang, it's still there. It's still there. It already proved itself before. Just pulled back, pressure came in, time to execute and write it. Right? All right, let's see if I have other examples. I don't have other examples, but let's see. So this is a simple example on the ES, right? So it went down here. Now notice in the higher time frame, it pulls back to a level. All right, first step for pullback reversal trading specifically, it needs to pull back to a level, any level. All right, it has to be a higher time frame level where there was buying or selling before. That's the criteria. Was there buying or selling before at a particular level? And so we'll see if that buying or selling is still there. So obviously this is a level where there was buying and selling. Why? Because it hasn't moved up. So now it's coming back to that level, right? It could be volume-based level, it could be highs and lows, doesn't really matter. It needs to be common sense in that there's buying and selling pressure before. So as it comes back, we have this area here, and then I'm watching this, right? And bang, you have your demand come in. So it has to go into that area, and then demand, big green, big green. I'm looking to get into pullback. If I can't get it here, I'm going to be looking to get it because it didn't pull back, then it continued up. I'm going to be looking to get in on the pullback somewhere here. All right, let's see if I have another example. This one is an example where I want to, show when sometimes it works, sometimes it doesn't work. So this example is a example of it not working, or maybe it worked. I'm not really sure. Well, we'll just take a look at these pullbacks here. Okay, so you had a rally, it pulls back to these areas. You see this low, low, low. So we'll just take a look at these last three lows. All right. So as price goes to this low, so we back it up to those lows. It's already an example right here, big green. See, it goes into those lows, and it's within the zone, and then you have this. So that's big green right there. This is big green right here. See, it has to go into a level or a zone area, and then big green. And look what happens. Right? So that low corresponds with this low, and then you have big green, and that's it. So now we'll take a look at the other low and see if we have any evidence. And we do, right here. So you have that green come in, right? So it's going down, it needs to go into the zone, and then you have big green, bang. All right, so now that doesn't mean every single time it's going to work, but like here, it went to a level of resistance. You had selling pressure, big red, and when you had big red, you had volume challenging it. So let's say you took the short, it will pull back, and then you have big green overtake it, so they blew out resistance. So sometimes, you know, that's what happens. But for me, I would take this short and probably break even, and also be warned ahead of time that there's something going on here on that pullback. Because yes, you had supply, but there's demand because of that pullback. It's pretty strong, with the biggest in 28. So if I get in, I'm out, either small loss or break even. I wouldn't get in at all because it's responding with strength. I want it to respond with weakness, right? All right, so the idea here again is a very simple idea in that it's just a gauge of pressure. The point and figure with volume, also known as the tape beating chart, defined by Wyckoff, which isn't really used that much today, and it's, for whatever reason, right? The idea is that it shows you pressure. It's like, and there are two steps. First, level, zone, and then pressure. And then you execute. Now, however it is that you execute is up to you, but this is basically it. That's trading. You have a level or a zone that you want to get in at, and you wait for price to go to it. Then you have buying or selling pressure, and you execute with risk management, and you're going to win a lot. You're going to have some losses. The losses will be smaller, the wins will be bigger. That's trading. Okay? And this tool allows you to see this second part. It allows you to see the second part in a way that other charts, they don't give you a level of clarity. Why? Because it takes out the element of time, and you can clearly see the buying and selling pressure in terms of volume up and down, and then the volume inside the column. Very important. Volume inside the column is very, very important, and it's a lot of it has to do with common sense, because if you have strong demand, there should be high demand inside the column pushing up price. The volume inside the column near the middle or the low is pushing up price. All right? It means that demand is there, and they bought up all the price, all the inventory, so price went up. And then you can get in on the pullback. So this is, there are other, you can find other tools to help you see buying and selling pressure, but what doesn't work is just relying on candles, because there's too much missing. There's too much information missing, where you cannot see or quantify the amount of buying activity in a candle, because the candles are split over time. So when you have overlapping candles, you're going to be looking at the volume of each candle instead of seeing the consolidation of the volume for a particular price range. And that's what you need to see, right? That'll allow you to see volume clearer, meaning without the element of time, you will see the buying and selling pressure clearly within a price range. If you have time added to it, it will start slicing up that buying and selling into multiple time slices, so it'll chop it up, and you won't be able to see the volume for you, because it's chopped up into 3-minute bars or 1-minute bars or 5-minute bars. You have to consolidate that, and as you can see, the tape reading chart does that quite well. All right, and that's how Wyckoff used it also. Just is able to see those big prints at certain price levels, at highs and lows. I also similarly want to see those big prints because that is the footprint of the composite man or composite operator at levels where there was prior buying and selling before. That's how you select the level. Was there buying and selling there before, and then see if it's going to be there again on a pullback. And it has to be higher time frame. All right, thank you. Bye.